Good morning. Well, it looks like the Australian share market could re-enter bull market territory this morning following a stellar night on overseas equities and commodities, as it seems the world could be closer to a COVID-19 vaccine. However, local traders and investors have a lot to digest, with a lot of company quarterly reports and half-year announcements, including ANZ, which just announced its half-year profit tumbled over 50% lower, and it's deferred its half-year dividend. However, the Aussie share market futures are suggesting a lift of 2% at the open. So if we do see that rise, the ASX 200 would have collectively gained 21% from its March lows, which puts the market back into bull market territory. Now, global markets puffed ahead for three very important reasons overnight. One, Gilead, the US biotech firm, revealed its trial has cured 50% of patients with severe coronavirus. Secondly, COVID-19 cases are slowing in the US. And thirdly, the US Federal Reserve has pledged to keep interest rates there close or near to zero to help the US economy. Now, in terms of what all of this meant for shares, well, Gilead shares charged up 6%, and as we announced and expected yesterday, Google parent Alphabet shares rallied ahead. They ended about 9% higher, with their revenue beating expectations. Most sectors, in fact, charged ahead, leaving staples and utilities behind, with investors really flicking on that risk on switch, even in the face of a steep drop in economic growth, as US GDP saw its biggest fall since the GFC, falling 4.8% in the first quarter. However, the three indices saw stellar gains. The Nasdaq up the most, 3.6%, S&P up 2.7%, and the Dow up 2.2%. Euro markets also higher, all about 2% higher each. Also fueling the rally, importantly, a bounce back in the oil price, which rose 22% to back above the $15 mark, while the safe haven gold lost $7 compared to yesterday. It's now $1,713 an ounce. Now, in terms of what to go through today, as we announced ANZ half-year profit, their half-year profit, statutory profit, fell 51%. Now, it's now at $1.5 billion. This is a pretty good result, you'd think, but it was much weaker than anticipated, largely weighed down by COVID-19 impacts. The bank also announced they're deferring their dividend to preserve capital until there's greater clarity about the economic impact of COVID-19. Now, in good news, Fortescue Metals, Australia's largest iron ore producer, reported record third quarter iron ore shipments, which rose 10% compared to the same time last year. It also announced strong free cash flows, which is what the market wants to hear, taking cash on hand to $4.2 billion. So plenty of surplus cash, you'd think it would seem, to continue to pay dividends. And in good news, it also dropped its quarterly costs by 3%. Elsewhere, property companies are reporting. GPT Property Group and Mirvac and Qantas, the flying kangaroo, their update will be out with their major shareholders. Hopefully, we'll be keeping an eye out if their shareholders will be either giving the lifeline or giving Qantas a lifeline or taking it over. So we'll see what happens there. And Woolworths also reports quarterly sales. Elsewhere, what to watch? On the economic front, I'd be watching borrowing data out for March, as private sector credit data is out. Year on year, borrowing in February grew 2.8%. So you would expect growth to be significantly less in March, particularly given NAB is expecting to run a yearly loss and not make any money from borrowing costs. So closely keep an eye on that. And in terms of what to watch this evening, weekly jobless data is out for last week in the US. And so we're expecting a large alarming rise in unemployment, but it seems traders and investors are paying a lot less attention to economic data and more on individual company results, and importantly, finding a vaccine. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.